Better than expected growth for the Chinese economy. But what does it mean for the year ahead? Hello, I'm Nathan King in for Anna Naidu, and this is The Heat. Hello again. China's economy grew by nearly 7% last year, almost half a point ahead of its projected growth rate. It's the first time since 2010 that the economy has grown more than the previous year. While the projection for 2018 remains at 6.6%, many observers wonder if China's solid 2017 growth will carry throughout this year. But a series of challenges confront the economy, the markets and policymakers this year, and few, if any, have simple solutions. CGTN's Flynn takes a look at what's in store.
It might be the year of the dog, but for those watching China's economy, pigs are providing a picture of what might be on the horizon. Backyard pens are being transformed into automated hog barns, more typically seen in places like the United States, with $11 billion invested over the last 2 years. Experts say that higher output could stabilize China's notorious pork price volatility and make it more competitive abroad.
With large-scale farming, profits can only go up. Profit margins will be greater because we can reduce costs and resources.
After GDP growth accelerated in 2017 for the first time in 7 years, figures for 2018 have already been revised up. An improving global outlook has, of course, helped, but the biggest boost has come from soaring Chinese exports. Trade protectionism could well threaten that. China itself has been labelled as one of the culprits of that by the EU and the WTO. But it's America's aggressive stance on Chinese imports that's casting a shadow over global trade and in particular over steel. There are calls in the US to impose at least a 24% tariff on the metal to squeeze a recent surge in imports.
I will make a decision that reflects the best interests of the United States, including the need to address overproduction in China and other countries. You have countries that are so overproducing, and what they're doing is they're dumping it on us.
Trade politics aside, the Chinese currency is also pressuring exports.
This year, the RMB strength is like phenomenal. For the time being, I don't see how export growth can contribute much more than last year.
But there's plenty of reasons to be optimistic. Manufacturing has proven to be one bright spot, with private PMI numbers for January beating economists' expectations. And some analysts say factory activity could be a key indicator of the health of the Chinese economy.
We think the manufacturing recovery is a 3 to 5 year phenomenon, and it's an important anchor for growth. It's an important factor that gives regulators and policymakers confidence to push forward with reform.
Meanwhile, Belt and Road investments show no sign of slowing down, and although debt levels pose an ongoing risk to financial stability, there has been a big drive to curb the country's credit woes, even if the IMF says the reforms don't go far enough. Flynn, CGTN, Hong Kong.